Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We're chatting a little bit early this week. As we take a look at the markets, let's talk about what's happened here through midday on Friday.
Yeah, I think if we start on the cattle side, live fed cattle basically unchanged for the week, while those cash feeder cattle markets were 3 to 7 higher this week. On the future side, live cattle August futures contract was up a little more than $2 this week, while the August feeder cattle contract closed down about $1.80. I think a lot of that continues to do with what's another 40-cent higher corn price run that we got this week on corn futures for July. On the choice box beef side, 50 cents lower this week. We saw some weakness in loins and briskets this week that I think moved that choice box beef price lower for the week. On the hog side of the equation, we lost about a little shy of $1 on cash, barrow, and gilt prices, while the July lean hog futures contract closed down 50 cents. Really unchanged on the pork cutout value, as we saw picnics up, offsetting what were slightly lower belly prices for the week.
Are we keeping a close eye on some of those, at least at the pork cutout value, especially on the ham side of things, to kind of see how it navigates the latest round of tariff and trade news?
Yeah, absolutely. We might get some positive news there on the ham side if we see more hams move to Mexico now that we seem to be in a position where we aren't going to talk about any more Mexican tariffs on U.S. ham.
Big report for this week, and probably our biggest news of the week, has to be USDA's supply and demand estimates report that came out. Let's talk a little bit about those numbers, what they said, and then we'll get into how that relates back to our livestock producers.
Yeah, so USDA did give us a lot of change this week in that WASDE report. They trimmed corn plantings by 3 million acres and cut yields by 10 bushels relative to the May projections. If you follow that through the full SNU, that would take ending stocks to about 1.7 billion bushels, and that's ending stocks for the end of the crop that we'll harvest this fall. We haven't been that tight really since 13-14, so more upside potential, and I think we've seen corn futures rally as a result of that. I'd remind us, although USDA made very few changes on the soybean side of the equation, I think they would say it was just too early given how late plantings have been. So we'll have to keep paying attention. One can make an argument for more soybean acres being planted as a result of fewer corn acres. One can make an argument of fewer soybean acres just because of the weather issues there. It's just pretty early on the soybean side to say too much.
Do we get a little nervous on the livestock side of things, knowing that corn prices are projected to go up? We're looking at a smaller crop than we had anticipated to start the year, but then also there's still going to be some acres that just may not get planted at all this year.
Yeah, so for sure we're going to lose acres. Some of the flooding along the Missouri, Mississippi that I'm aware of, those acres probably don't ever come into production this year. I am worried. I think we have some upside potential. I remind us we're going into this with more stocks than we've had for a while. But we certainly could not be done seeing corn prices move higher. I think the one that's tough right now is just what happens to yields at the end of the day. It's been a cold, wet start. Do we catch that corn crop up as we go through the year and end up with relatively good yields, or is all this wet weather that we've started with really stymie ultimately what we get in the bin?
And then if we turn off hot and dry, I would assume that this crop's not going to have a great root system as well, because there's so much water and we've been so saturated.
Yeah, absolutely. And it reminds me to remind us about hay as well. I don't think I've heard anybody that's put hay up at this point that hasn't been rained on. So it has been wet on the hay side as well. And you're correct in that, boy, if we turn off in the 90s and no precipitation, that could spell some further problems on both the hay and corn side, especially.
Do we worry about, do we have demand concerns as it relates to livestock, and as we take a look at that supply and demand report that came out this week as well, you mentioned having such large stocks on hand.
So some demand issues for sure. I guess the thing that I was happy with out of what we got on the livestock side of the ledger from USDA this week was maybe a little bit of trim in the overall levels of production this year. Another half a pound lower in terms of per capita meat consumption of the three meats. So maybe that's a positive. A few more pork exports in 2019, according to USDA. So I think all those things could be helpful. But we are paying attention to the demand side. The last thing we need right now is for the economic situation in this country, or frankly in other countries, move lower. That could be troubling for us.
Let's talk a little retail prices. Those numbers also came out this week. As we take a look at May, any surprises there?
Well, so I think the one thing that, although we've had all this discussion now about weaker consumer demand, the retail beef price was higher for the fifth consecutive month in May. It averaged $6.17 a pound. That's the highest monthly average we've had since 2017. Pork retail prices were up nearly 10 cents in May relative to the previous month, coming in at $3.88. So we're getting higher retail prices moving through, even though we might be talking about some concern on the demand side.
Consumer sentiment also out this week, and we saw a jobs report last week that might be considered less than stellar. Does that kind of carry over into our consumer sentiment and how things are looking for June?
Well, we certainly got a less than exciting consumer sentiment report this week. So month over month, so June of this year relative to May, down a little over 2% in that overall index of consumer sentiment. I guess the good situation is the current economic conditions, that index actually was 2.5 points higher than where it was in May. And we're really getting this index of expectations that's, much lower, and really driving that overall index down.
Demand really has been what we've been focusing a lot on this year, and especially we had a lot of or some positive movement out of the talks with Mexico since we talked last Friday, but things are still looking pretty rough as we talk about China and that situation. How does that global demand picture play into what's going on here in the U.S. and continues to go on here in the U.S.?
Yeah, well, so I am excited with maybe what's a better situation in Mexico. If you look at what USDA did in WASDE, another roughly 240 million pounds of pork exports in 2019 and almost 300 million in 2020. Reminds me that there's some export strength coming, and it probably Mexico could be important to that. So the China situation remains very unclear. I think we're learning that the Chinese can either substitute meat products, but maybe more importantly, just reduce pork consumption this year as a result of African swine fever.
All right, Scott, anything else?
I think we've covered it for this week.
All right, next week's reports.
So we have livestock slaughter on Thursday, cattle on feed, and cold storage to wrap up the week. So a busy week next week.
Plenty for us to talk about then. Have a great weekend. We will talk to you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can submit questions there and subscribe. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.